Jeweller Anil Jain's sales have slumped more than 20% in the past year compared to 2018. So he had high hopes that India's annual budget would get customers spending again. But he's feeling let down.
We were expecting a lot of giveaways, a lot of goodies and better policies, but we were very disappointed.
Indian Finance Minister Nirmala Sitharaman was under huge pressure. She had to keep spending in check, but she also made a promise.
This is the budget to boost their incomes and enhance their purchasing power.
The government announced a widely anticipated income tax cut, although it fell short of expectations. The budget also includes plans to spend $40 billion on farming and rural areas and plans to develop new roads. The government loosened its purse strings a bit to fund such measures, increasing its fiscal deficit target for the next financial year from 3 to 3.5%. Analysts say these steps could help in the longer term, but as weak investment and consumer spending weigh on the economy, many want steps that would help India quickly regain its title of the world's fastest growing major economy in 2018. The government is forecasting GDP growth of 5% for the current financial year. That's India's slowest growth since the 2008 global financial crisis. Economists say that India needs levels above 8% to create much-needed jobs, which is why there's a lot riding on this budget. Investors are clearly disappointed, with India's benchmark stock index down around 2% since the budget announcement.
Around this budget, there was too much of expectation. But there are two contrary things. On the ground situation was that the government had very little fiscal space where it could work. At the same time, there were expectations that there will be huge amount of stimulus to take the economy out of the current kind of low growth scenario.
But business owners are not giving up. They're now hoping the government will come up with an emergency plan over the coming months to bring back the shine to India's economy. Rebecca Bundhun, TRT World, Mumbai.
Well, for more on the story, let's bring in TRT World's senior business producer, Mobin Nasir. Hi, Mobin. It really wasn't an earth-shattering budget that investors were really hoping for. Nonetheless, what were the major issues and the major points of it?
I think that would have to be, first of all, the tax breaks for personal income tax. Last year, the government lowered taxes for companies. This year, it's done the same for individuals. It's also taking steps to simplify the tax code, and that is something that this government has been talking about. We saw 70 exemptions being removed from a list of about just over 100. And then, of course, there's the spending on infrastructure, healthcare, education, and sanitation being the biggest heads, besides, of course, loan repayments. But perhaps the one that has attracted the most controversy is this plan to sell some of the largest public sector entities. And I'm sure you'd want to delve more into that a little later.
Yeah, well, before we do that though, it was interesting because the stock market was opened over the weekend after the budget was unveiled. What was the reception among investors?
Right, and we saw the market falling about 2.5% on that day. But then today, it seems investors sort of perhaps had more time to swallow this news. Look, there were a couple of things that we'd been hearing from analysts, certainly leading up to the budget announcement. One of those expectations was some sort of a relaxation on capital gains that investors earn on the stock market. Of course, that didn't happen. There was also an expectation that the government would continue to spend more money on bailing out the banks, and that perhaps is something that was expected because that's what the government's been doing. And that too didn't happen. So perhaps those were the two reasons for that early sort of pessimism. But since then, what we've seen is the market has readjusted and there was fresh buying today.
Let's talk more about one of the measures that you pointed out, that's the selling of public assets. We know the Modi government has been quite open to private investment in the Indian economy, which has notoriously been quite closed. So what are they proposing to sell?
So the insurance corporation is one of the largest government-owned financial sector entities, but this isn't the first entity that they've been trying to sell. We've been reporting on Air India, the national carrier that the government wants to completely privatize, sell all of its stake in. There's also Bharat Petroleum, and they've had interest from foreign companies in that as well. Really, the play, it seems to be here, is of course by selling some of these, the government would make money, would be able to generate cash that could perhaps go towards servicing some of that debt. We know the fiscal deficit has been rising, so that's something that the government would be conscious about. Having said that, this is a very, very large company, upwards of $400 billion in assets, so its sale will probably have to go through a lot of legal hoops. It's not something that's going to be accomplished in this fiscal year and will probably take longer than the next year also.
Now, unemployment is a huge issue for the Modi government right now. Does this budget propose to address that?
I think the government seems to have taken a different approach, at least to the past couple of years, whereby it was giving money to the banks, hoping that that money would then trickle into businesses. But that hasn't really worked. We've seen data just from this month showing lending has fallen to the lowest level in 5 years. Now it seems the government is hoping to attract foreign investors. It's a break from its previous policy, but it's one that might work considering that growth is much slower in other parts of the world, and that the government is offering some benefits to foreign investors specifically, which are also not available to domestic companies. So the play here really seems to be to attract foreign money and private sector where the government was expected to fill in.
Okay, well, let's see how these budget measures get rolled out over the year. Mobin, thank you as always.